In this presentation, we will be entering purchase orders, otherwise known as POs, into QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the Open Windows open. You can open the Open Windows by selecting the View dropdown and selecting the Open Windows list. We're going to be entering the purchase order. I think the best way to go to the purchase order is straight from the Home tab. Within the Vendors section, we have, of course, the purchase order. The purchase order is going to be in the process of the purchasing process. However, it won't be within the purchasing process for basically every type of company. It depends on whether you'll be using the purchase order or not. The purchase order is one of the more confusing forms on the home page. Why? Because every other form, or most every other form that you see on this homepage, is a driving form that will drive QuickBooks, tell QuickBooks to record a transaction. QuickBooks will then use the form, in other words, to record a journal entry, debits and credits, or one account going up, or two accounts being affected, going up and down. Two accounts will be affected, accounting equation remaining in balance, debits and credits happening. The purchase order, however, this is not the case. It's not something that's recording a financial transaction. There's no change, in other words, to the financial statements, the balance sheet, income statement, or profit and loss with the recording of the purchase order. That then different than just about every other kind of form that is in this home page. Why is that the case? Because the purchase order is going to be a request for us to purchase inventory. So we're requesting that we're going to purchase inventory. However, at the time we make the purchase order, we have not yet received the inventory. We have not yet paid for the inventory. Therefore, there's no financial transaction that's going to be reflected in terms of the financial statements. We can't record the inventory typically until we have ownership of it, till we've received it in some way, shape, or form. We can't record the payment, obviously, until we make the payment. However, we want to track the fact that we have sent a request for the purchase order. Now, the other thing, it's a little bit different here. If you imagine the purchase order and think about how that relates to your normal purchasing habits, it probably is a little bit different. Normally, if I was to buy something, say, online, even if I had a business where I bought something online or did some kind of online selling, typically then I might pay for the inventory before I actually receive the inventory. That's typically how it would work if I was to purchase something individually. I'd give them my credit card, pay for it. They would then ship that information to me, or that inventory to me. If that happened, I would record a financial transaction at the time of payment because I made a payment at that time, even though I had not yet received the inventory. I made a payment for it, and therefore the payment, the cash going down or the credit card liability going up, is a format of financial transaction. So if that's the case, then you're going to record, in essence, the transaction, at least the cash side of it, when you make the payment. However, if you are purchasing something, say you're purchasing from China, a big shipment or something like that, it might be the case that we as the purchaser have more leverage and don't have to make the payment up front, but simply be able to say, hey, here's the purchase order. You ship me the goods. You ship me all the cups that I'm buying, or something like coffee cups or whatever. And then once I get them, I'll check them, I'll count them, and at that point in time, then I'll make the payment. So in that case, you'll see the difference here. In that case, we haven't made the payment up front. All we've said is, hey, I'd like this many cups. Would you ship them? I'll check them. Then I'll give you the payment at that point in time. So in that setup, we have a request that we want to track, but there's no financial transactions happening to the financial statements. So that's what we're going to do within the purchase order. So we don't really need to check the financials because there's nothing going to happen to them. So we're going to have the purchase order, and then later on we're going to receive the inventory and record the bill at that point in time, and then of course pay the bill. And then later on we'll sell the inventory down here. We're imagining, of course, we're purchasing guitars in this case for our Get Great Guitars shop. We're going to be purchasing them from Epiphone first. So we're going to go to the purchase order. And we're going to start up top with the vendor. We have I'm going to minimize this screen over here. We don't need this at this time. We got the vendors drop down. Now, we are going to choose our most common vendor. If we purchase a lot from the same vendor, then obviously we'll know our vendor well. In this case, we're going to say it's going to be Epiphone. That's who makes the guitars that we're going to be purchasing. We're going to tab through this. I'm not going to put anything in the drop ship to. We've got the template We're not going to adjust the template. We're going to be using the default template for the purchase order. Notice I'm just tabbing through this form. The date that we're going to want to use is the 12th. We're on the 11th here, so I'm going to select the plus button to bring it up to 12. We're going to say purchase order. Let's start it with 1001 because this is the first one we are using. Here is the vendor. We don't have an address here. We may want to include the address for the vendor. This is being populated from the adding of the vendors, whether we need it or not. Then we have the ship to, and this is going to be our address for Get Great Guitars. Then we'll go to the items. So we've already set up the inventory items. So if I select the drop down, these are the inventory items that we're purchasing and then we'll be selling. As we set up the inventory items, you'll recall we set up both the cost and the sales price. So we're going to be picking up an ELP, and notice it populates for us with the rate already. How did it get that rate? That means you'll recall that I'm going to go to the lists drop down. We're going to go to the item list, and we set up these items, and we have the ELP here. Now, what if the vendor changed the rate? What if it costs something different now? Well, you could go into this list then, and we can edit it, and I can go to the items drop down and edit the item. And then here's the cost. Here's what we're going to sell it for. That's what our system has right now. If the cost changes, we can change the cost here, or of course within the purchase order itself, we can override this number and change the cost here. So we're going to buy one of these, and the customer field is optional. So if we, for example, if we were to make this purchase order and buy this guitar just to put in our shop in case someone walked in and wanted to purchase it, then we don't have a customer. We don't know who we're going to buy it from. However, we might be in a type of industry where we're basically saying, the customer comes to us and says, we would like this type of guitar, let's imagine. And we say, that's great. But then they say, I want this color, I want this, certain customization to it, which we don't have in the shop. We say, that's okay, we will order that for you. And then once it gets here, we will finish the transaction there. So they give us the order. Now we're going to Epiphone and getting this custom guitar from Epiphone. And therefore, we can apply it directly to the customer so that when we then receive the guitar, we can link the purchase order directly to the customer that we purchased it for. So in this case, we're going to call the customer, not here in the drop-down, it's going to be called Eric Music. Eric Music. It's a pretty generic name, but then we're going to say, there it is. And I'm going to say tab. Notice we are adding a customer now in this field. We didn't go to the customer section to add the customer. We're simply adding the customer as needed as we enter data into the forms. Now, we would probably want to do the full setup to add the new customer to enter all the data for the customer here into QuickBooks. However, all we need to do right now is to add the quick add, and our goal isn't to populate the customer section all again, so we're going to spare you that. We've done that in a prior presentation. We're just going to add it quickly. So then we have the 400. There it is. I'm going to say save and close. So there we have that information. If we go to the Home tab, the next item that will line up with this is the receive inventory with bill typically. So with bill or without bill. And just note that if you were to go here and we were to choose basically the vendor that we had, which was Epiphone, then it's going to ask you, do you want to match up the purchase order? It's going to link those two together. And that's how the purchase order will be helped to be tracked. Now, I'm not going to do this now. Don't do this now. So I'm going to say no right now, because we'll do this in a future presentation. If you do it, it's not a big deal, but we'll do it later. I'm not going to record this. I'm going to say no. And we're going to record instead another purchase order. Now with this one, we're going to set up a new item as we make the purchase order. So I'm going to put a new purchase order. It's going to be Gibson. Now Gibson, notice we don't have a Gibson yet. That's going to be another guitar company. So we're going to say Gibson. We're going to set that up. I'm going to type it in there, say tab. It's going to say, do you want to set it up? We're going to say yes. We're only going to use the quick add. We're not going to set up all the vendor information, although you may want to do that for your major vendors. We're not going to do that here. Tabbing through, we're going to say January 12th. That's the right date. It's now populating the PO number in order. So now it's 1002. We'll keep that tab. Now we're at the vendor, keeping Gibson, tabbing through to the item. We don't have any items related to Gibson. You'll recall the items. I'm going back to the home, to the open windows. are these items that we set up. We didn't set any up for Gibson because we didn't know about Gibson. Somebody came into our shop and said, "I want a Gibson." We said, well, we'll see if we can contact Gibson for you and try to pick that one up for you. So we're gonna have to add the item. We're gonna have to add the item. So we're gonna call this a GSB. And notice we're once again populating or adding the item as we populate the form, as opposed to going to the item list and populating the item there. We can just do it simply as we populate the form. Default method then being check to make sure that the item is there or not. If it's not there, then add it. You don't want to double up on items. In other words, you don't want to keep on creating new items, And so we're going to say tab, and then it's going to ask us if we want to set it up. We're going to say yes, please set that up. Now this is going to be an inventory part. It's a bit of a complex data input screen because we do need two sides to this. We need the cost and the sales price and the accounts related to them. So it's going to be an inventory part, not a service part, because we're buying inventory. We're going to say this is going to be the item name. It's not going to be a sub item. I'm just tabbing through this. Description, we may want a more detailed description. I'm going to call it a Gibson SG. So that's going to be the full name of the guitar, Gibson SG. The cost we're going to say is $598. And that's going to be going to the cost of goods sold account when we make the invoice. Not now, because not with this form. But when we sell it, making the invoice of the sales receipt, it'll go to cost of goods sold. Preferred vendor, we're going to say is Gibson. That's who we buy it from. And then the description will keep the same. We're going to say the sales price is going to be 777.4. And we're going to say the code, it will be taxable. That's for the sales tax. We will have to pay sales tax because it's inventory within the location we're at. And then the income account is going to be merchandise income, merchandise sales. So there we have that. That's all we need to populate this. So we're going to say OK. Now notice again, this isn't going to record income. It's not going to record cost of goods sold. We had to populate those amounts into the data input. So when we make the invoice, it'll populate those types of fields. And when we enter the bill, it'll populate. So we're going to say we only want one of these. That's how many we will be purchasing. And this one, we do have a customer. So we're going to add a new customer. We don't have the customer there. It's going to be Music Stuff Store. So it's kind of a generic name. Music Stuff Store. All right, and that's going to be our vendor. I'm going to say tab. We're going to add the customer. This is our customer. Again, we would probably want the detail here for the customer. We're not going to add all the detail. Once again, we'll spare you that and just go to the quick add. There we have it, and save and close. And if we go back to the home tab then, we've entered two of these purchase orders, which will then link and help us to then track the orders that we have had and then record them when we actually make the payment or enter the bill and receiving the inventory. So we expect then Gibson and Epiphone to send us these guitars once we receive them. Then we record the transaction that will actually affect the financial statements. This transaction here has not affected the financial statements. Once we get those items, we will then record the transaction into the financial statements, increasing the inventory that has then been received. The bill that we then owe, accounts payable account, would be going up, or the payment we make, if we actually were to write the check, checking account going down.